Welcome to the Daily Nugget, daily property insights. One topic, 20 minutes or less, 7 days a week. Myself, Lotze, and joined by Andrew Armstrong, a mortgage specialist and a fellow property investor. And AJ, the question to you today is, which is all over the news, literally every single day for the last couple of weeks.
I think I know what's coming.
Is this CCCFA change that was implemented since the 1st of December, or literally the change that a lot of people don't know what the acronym is, the change that has literally bottomed out the mortgage market or mortgage loan approvals? So can you talk me through what it is and why has it drastically, I think it's something like 7,000 mortgage loans got declined in the last 30 days, and why has it had such a drastic impact to the market?
Yeah. It's certainly currently a game changer, hot topic, as you say. It has caused a lot of headaches for a lot of people, and it's not well received by everyone. I think it's the crux of it. Obviously, there's a lot of information online, so anything I'm sort of saying, you can really go down the wormhole here with what is the CCCFA, Credit Contracts and Consumer Finance Act, I think 2003 there. But essentially what it is it's an update on to the Act that introduces further scrutiny, heavy scrutiny on spending, personal spending habits, and your ability to borrow in the current market and current environment based on what you're actually spending down, more or less down to the dollar. So, the old adage, give up your cup of coffee or your avocado on toast. Well, that actually is starting to be, hey, guys, you've really got to demonstrate that you don't eat avocado, you don't drink coffee, nor will you look at either of those from a cafe. You need to demonstrate that you don't have, some of these expenses in order to reduce your total outgoings in any given month, in order to, again, show the bank that you can actually afford the loan at their test rates, etc. It's pretty intense.
So they've brought in fundamentally a line-by-line review of your bank statements, fundamentally, and looking at actually each cost point and expenditures through the month, where normally it was a holistic, how much you spend here, how much you spend there, and sort of the overall income to see if you can service a loan. One thing is, obviously, like you said, is it's gone down as crazy. I mean, there's articles all over the news of people losing loans because, yes, they had their coffees or their gym membership was too expensive and therefore the bank wasn't happy and had to remove that sort of stuff. But what I want to find out as well is, what is the mandate, or why is, like, the banks are implementing this, but the government's turned around and said, no, you don't have to be that strong. What is the ruling of why the banks are implementing it hard, that all of a sudden that's gone out, that people are losing their mortgage applications? Is there something missing in the middle?
There's a huge fine that's going to go onto the directors of those banks should they let something slip, and it's 200,000 per incident. So you can imagine as a sort of a bank director, you're not willing to hang your hat on 200,000 if you're in a bit of grey area. You're just like, no, this is the interpretation of that act. This is a consequence to me. We're enforcing this heavily. If some people can't afford a loan when they might have, before December, then that's too bad.
So anyone that's, AJ, that's watching this or listening at the moment and goes, okay, I'm just about to put in an application or have had an application, is what can they do, or what is sort of a tip or trick at the moment? And I don't like to use tip and trick when we're talking about the banks, but what is a benefit that they can look to do to implement in their day-to-day life that might give them a more positive result when they come and speak to the likes of yourself or another broker or the bank for a future loan?
No, and again, that's exactly it. Tip or trick, whatever it is, it comes down to budgeting. What are you actually spending per month? What are you spending on necessities, and what are you spending on discretionary expenses? So in other words, like power, phone, food, sure, that's what it is. Do you know what you actually spend? Lots of people don't. Lots of people don't even know what their average food bill is. They just go and buy it. And if you're going to go and buy it, Uber Eats, well, we'll do that too. We'll go to the dinner, go to pubs. So it's just a matter of going, well, what's my budget? And then going, if I were to have a mortgage, how much does that cost? I need to make those changes now as if I had a mortgage. And that's really what they're trying to, that's the way that's going to help you through this and get you a loan.
Has it had any impact? So that's obviously for new applications and loans, right? So going down and seeing all those actually line by line expenditures and seeing that, hold on, doesn't align as best. Has there been any impact with the ruling on existing investors? Has there been any changes on how the banks have to now look at their accounts as an existing investor that owns either one investment property or has 50 investment properties?
Yeah, there's a bit more in there as well. So it's going, not only are they going personal expenses, what are you spending, your money on, but they are starting to take a bit more of a deeper dive into what's actually happening in your investment portfolio, rather than having a shaded, your rent of $1,000 a week, shaded by 25% or 20% or 30%. They look at what's the actual expenses in the portfolio. What are your rates? What are your insurances? Are they higher? Are they actually more than what that 25% shading is? And also, what is the impact on the interest deductibility from the new regime and moving interest? So, it is. It's impacting that as well.
I'm guessing you've seen direct impact. I know I heard discussions with you just recently through the Christmas break, and you said to me how it's been crazy in the market and how many people have been so affected. And to anyone that's watching and listening, if you've been affected by this and you're not sure what your options are, please, not saying I can give you all the answers or AJ can give you all answers, but by all means, reach out to one of us, and I'm happy to introduce you to Andrew and sit down and see if there's a viable option of trying to get to what you're trying to achieve. But as Andrew did say, these guidelines are very aggressive. The fines are very aggressive. So it's going to make it challenging for the individual personal families at home trying to get their loans. And it's just, again, a subtle way of seeing how this current government has no understanding how the current marketplace is working and the effect on the legislation that they implement. So hopefully they'll learn from this over the next couple of weeks and do some changes.
Yeah. I think it will change. It's going to have to one way or another, but it's likely to take 6 to 9 months. It's not going to be a quick turnaround of this slow moving ship. What I can say though is that if you had an approval in the past and you went unconditional, you entered into a financial agreement with one of the banks, it's highly likely that they're still going to honour it. They're still going to go through the process of re-looking at your income and expenses, but they're going to take a bit of an approach to go, hey, we helped you get into this mess, we're going to get you out of it. And as long as your financial position hasn't changed significantly, then they're going to stand by you. These banks aren't here to hurt, they're here to help, but they have to abide by the legislation that they're bound by. Banks have a couple of main features. One is to hold a banking license in order to be able to get, and the other one is to obviously give out money. But if you can't give out money if you don't have a banking license, and you don't have a banking license if you break the laws that are imposed on you. One other thing, just quickly there, is that we're still getting applications approved. It's not like there are no applications getting approved. But one of the key things is if it was a marginal deal in the past that was able to get approved, and what I mean by marginal is that you had a lot of discretional expenses in there, where we said, hey, look, once they have a loan, they're going to stop, or this and this situation is going to stop because of this, they're more likely to be declined. Strong applications are still strong applications, and then those are that nice, clean, clear, they're still getting approvals. So it's not all doom and gloom out there. It's just a lot more work, a lot more time, and being conscious of your financial position.
Great. Thanks so much for that, Andrew. And as always, if there are any questions or queries for myself or Andrew, just drop it in the comments below, depending on where you're listening or watching. And as always, thanks for coming over to the Daily Nugget, Daily Property Insights, one topic, 20 minutes or less, 7 days a week. And as always, hope to see you tomorrow.